pay their taxes, serve their country, and volunteer for their communities, and just looking for a little bit of breathing room, just a little bit of light. Ordinary Americans doing extraordinary things. People who break their necks every day for their families and the country they love. A country that, in fact, which on the day I was elected was in extreme distress, with the virus on a deadly rampage that has now killed over 500, I carry it in my pocket every day. I have the list of exactly how many have died. 547,296 Americans dead from the virus. More than all the people killed in World War I, World War II, the Vietnam War, 9/11. 547,296 Americans. And an economy that left millions out of work and created so much anxiety. That's why I moved so quickly to pass the American Rescue Plan with the help of my friends here in the Congress. I really mean that. It didn't pass by a whole lot, but with the leadership of Connor and Bobby and Mayor, you got it done. Because it was an emergency. We needed to act to save jobs, to save businesses, to save lives. And that's what we did. We're beginning to see the results. We're on our way to having given 200 million vaccination shots in the first 100 days of my presidency. When I said I'd get 100 million done, people thought it was a significant exaggeration. We're going to get 200 million done, twice the original goal, because of all the help of all of you. Leading economists are now predicting our economy will grow 6% this year. That's a rate we haven't seen in years and years. We can cut child poverty in half this year. With the American Rescue Plan, we're meeting immediate emergencies. Now it's time to rebuild. Even before the crisis we're now facing, those at the very top in America were doing very well, which is fine. They were doing great. But everyone else was falling behind. The pandemic only made the division so much worse and more obvious. Millions of Americans lost their jobs last year, while the wealthiest 1% of Americans saw their net worth increase by $4 trillion. Just goes to show you how distorted and unfair our economy has become. It wasn't always this way. Well, it's time to change that. I note parenthetically that I got criticized for giving tax breaks to middle class and poor folks this last time. I didn't hear that hue and cry when we were doing the same thing. When Trump's tax bill passed, 83% of the money went to the top 1%. You know, this is not to target those who've made it, not to seek retribution. This is about opening opportunities for everybody else. And here's the truth. We all will do better when we all do well. It's time to build our economy from the bottom up and from the middle out, not the top down. That hadn't worked very well. For the economy overall, it hadn't worked. Because Wall Street didn't build this country. You, great middle class, built this country. And unions built the middle class. And it's time, and this time, when we rebuild the middle class, we're going to bring everybody along. Regardless of your background, your color, your religion, no matter, everybody gets to come along. So today, I'm proposing a plan for the nation that rewards work, not just rewards wealth. It builds a fair economy that gives everybody a chance to succeed. And it's going to create the strongest, most resilient, innovative economy in the world. It's not a plan that tinkers around the edges. It's a once-in-a-generation investment in America, unlike anything we've seen or done since we built the interstate highway system and the space race decades ago. In fact, it's the largest American jobs investment since World War II. It will create millions of jobs, good-paying jobs. It will grow the economy, make us more competitive around the world, promote our national security interests, and put us in a position to win the global competition with China in the upcoming years. It's big, yes. It's bold, yes. And we can get it done. It has two parts: the American Jobs Plan and the American Families Plan. Both are essential to our economic future. In a few weeks, I'll talk about the Americans' Family Plan, but today, I want to talk about the Americans' Jobs Plan. I'll begin with the heart of the plan. It modernizes transportation infrastructure, our roads, our bridges, our airports. I just left your airport. The director of the airport said we're about to renovate the airport. Is that right, Mr. County Executive? We're going to innovate. We're going to employ thousands of people. And she looked at me and said, I can't thank you enough for this plan. It grows the economy in key ways. It puts people to work to repair and upgrade that we badly need. It makes it easier and more efficient to move goods, to get to work, and to make us more competitive around the world. Some of you local officials know when someone wants to come in the area and a company wants to invest, what do they ask? Where's the first rail bed? How can I get to the railroad? What access to interstate do I have? What's the water like? Tell me about it. It goes on and on. It's about infrastructure. The American Jobs Plan will modernize 20,000 miles of highways, roads, and main streets that are in difficult shape right now. It'll fix the nation's 10 most economically significant bridges in America that require replacement. Remember that bridge that went down? We got 10 most economically significant bridges with more commerce going across it that need to be replaced. We'll also repair 10,000 bridges, desperately needed upgrades to unclog traffic, keep people safe, and connect our cities, towns, and tribes across the country. The American Jobs Plan will build new rail corridors and transit lines, easing congestion, cutting pollution, slashing commute times, and opening up investment in communities that become connected to the cities and cities to the outskirts, where a lot of jobs are these days. It'll reduce the bottlenecks of commerce at our ports and our airports. The American Jobs Plan will lead to a transformational progress in our effort to tackle climate change with American jobs and American ingenuity, protect our community from billions of dollars of damage from historic superstorms, floods, wildfires, droughts, year after year, by making our infrastructure more secure and resilient and seizing incredible opportunities for American workers and American farmers in a clean energy future. Skilled workers, like one we just heard from, building a nationwide network of 500,000 charging stations, creating good-paying jobs by leading the world in the manufacturing and export of clean electric cars and trucks. We're going to provide tax incentives and point-of-sale rebates to help all American families afford clean vehicles of the future. The federal government owns an enormous fleet of vehicles, which are going to be transitioned to clean electric vehicles and hydrogen vehicles right here in the United States of America by American workers with American products. When we make all of these investments, we're going to make sure, as the executive order I signed early on, that we buy American. That means investing in American-based companies and American workers. Not a contract will go out that I control that will not go to a company that is an American company with American products all the way down the line and American workers. And we'll buy the goods we need from all of America, communities that have historically been left out of these investments. Black, Latino, Asian American, Native Americans, rural, small businesses, entrepreneurs across the country. Look, today, up to 10 million homes in America and more than 400,000 schools and child care centers have pipes where they get their water from, pipes that are lead-based pipes, including pipes for drinking water. According to scientists, there is simply no safe exposure to lead for a child. Lead can slow development, problems. The American Jobs Plan will put plumbers and pipe fitters to work, replacing 100% of the nation's lead pipes and service lines. So every American, every child can turn on a faucet of our fountain and drink clean water. With each $5,000 investment, replacing a line that can mean up to $22,000 in health care costs saved. A chance to protect our children, help them learn and thrive. We can't delay. We can't delay another minute. It's long past due. You know, in America, where the early interest was in internet, this thing called the internet that we invested. We invented the early internet. It was invented here. Millions of Americans, though, lack access to reliable high-speed internet, including more than 35% of rural America. It's a disparity even more pronounced during this pandemic. American Jobs will make sure every single American has access to high-quality, affordable, high-speed internet for businesses, for schools. And when I say affordable, I mean it. Americans pay too much for internet service. We're going to drive down the price for families who have service now and make it easier for families who don't have affordable service to be able to get it now. As we saw in Texas and elsewhere, our electrical power and power grids are vulnerable to storms, catastrophic failures, and security lapses, with tragic results. My American Jobs Plan will put hundreds of thousands of people to work, line workers, electricians, and laborers, laying thousands of miles of transmission line, building a modern, resilient, and fully clean grid. And capping hundreds of thousands of literally orphan oil and gas wells that need to be cleaned up because they're abandoned, paying the same exact rate that a union man or woman would get having dug that well in the first place. We'll build, upgrade, and weatherize affordable, energy-efficient housing and commercial buildings for millions of Americans. Even before the pandemic, millions of working families faced enormous financial and personal strain trying to raise their kids and care for their parents at the same time, the so-called sandwich generation, or family members with disability. You got a child at home, you can't stay home from work to take care of that child unless you lose, the child's at risk, or you lose your job, or you have an elderly parent you're taking care of. And seniors and people with disabilities living independently feel that strain as well, but we know if they can remain independently living, they live longer. American Jobs Plan is going to help in big ways. It's going to extend access to quality, affordable home community-based care. Think of expanded vital services like programs for seniors. Or think of home care workers going into homes of seniors and people with disabilities, cooking meals, helping them get around their homes, and helping them be able to live more independently. For too long, caregivers who are disproportionately women and women of color and immigrants, along with the American Families Plan, changes that with better wages, benefits, and opportunities for millions of people who will be able to get to work in an economy that works for them. You know, decades ago, the United States government used to spend 2% of its GDP, its gross domestic product, on research and development. Today, we spend less than 1%. I think it's 0.7%. Here's why that matters. We're one of only a few major economies in the world whose public investment in research and development as a share of GDP has declined constantly over the last 25 years. And we've fallen back. The rest of the world is closing in and closing in fast. We can't allow this to continue. American Jobs Plan is the biggest increase in our federal non-defense research and development spending on record. It's going to boost America's innovative edge in markets where global leadership is up for grabs. Markets like battery technology, biotechnology, computer chips, clean energy, the competition with China in particular. Critics say we shouldn't spend this money. They ask, what do we get out of it? Well, they said the same thing when we first flew into space for the first time. They said the same thing. Well, pushing the frontiers led to big benefits back home. When NASA created Apollo's digital flight control system, unheard of at the time, it led to technologies that help us today to drive our cars and fly our planes. When NASA invented ways to keep food safe for the astronauts, it led to programs that have been used for decades to keep food safe in supermarkets. At least 2,000 products and services have been developed and commercialized as a result of American space exploration. GPS has helped us find each other. Computer chips allow us to see and talk to one another, even separated by mountains and oceans, singing happy birthday and watching the first steps of that new baby grandchild, comforting each other when comfort is needed. Think about what it means to you and your loved ones. We just have to imagine again. I had a long discussion with Xi Jinping, leader of China, and he called to congratulate me. We spent 2 hours on the phone. And he said, and I was astonished, my national security team and the China experts who were on the line, he said, you've always said, Mr. President, that you can define America in one word, possibilities. That's who we are. In America, anything's possible. Like what we did with vaccines a decade ago that laid the foundation for COVID-19 vaccines we have today. Like we did when the interstate highway system that transformed the way we traveled, lived, worked, and developed. Americans could visit relatives anywhere in the country with just a family station wagon. Business here in Pittsburgh could load up a truck and get a product to Portland or Phoenix. To this day, about a quarter of all the miles Americans drive each year on one of those very original highways. Imagine what we can do, what's within our reach when we modernize those highways. You and your family could travel coast to coast without a single tank of gas on board a high-speed train. We can connect high-speed, affordable, reliable internet wherever you live. Imagine knowing that you are handing your children and grandchildren a country that will lead the world in producing clean energy technology and will need to address one of the biggest threats of our time. That's what we'll do. Altogether, along with the American Rescue Plan, the proposal I put forward will create millions of jobs, estimated by some Wall Street outfits over 18 million jobs over 4 years, good-paying jobs. It also works to level the playing field, empower workers, and ensure that the new jobs are good jobs that you can raise a family on, and ensure free and fair choice to organize and bargain collectively. That's why my plan asks Congress to pass the Protecting the Right to Organize Act, the PRO Act, and send it to my desk. This plan is important, not only for what and how it builds, but it's also important to where we build It includes everyone, regardless of your race or your zip code. Too often, economic growth and recovery is concentrated on the coast. Too often, investments have failed to meet the needs of marginalized communities left behind. There is talent innovation everywhere. And this plan connects that talent through cities, small towns, rural communities, through our businesses and our universities, through our entrepreneurs, union workers, all across America. We have to move now. Because I'm convinced, if we act now, in 50 years, people are going to look back and say, this was the moment to compete internationally, create more revenue as well. They're among the highest value investments we can make in the nation, investing in our infrastructure. But put another way, failing to make these investments adds to our debt and effectively puts our children at a disadvantage relative to our competitors. That's what crumbling infrastructure does. And our infrastructure is crumbling. We rank 13th in the world. What's more, it heightens our vulnerability to and attracts our adversaries to compete in ways that they haven't up to now. And our adversaries are worried about us building this critical infrastructure. Put simply, these are investments we have to make. We can afford to make them. Or put another, we can't afford not to. So how do we pay for it? I spoke to the majority leader. I guess he's no longer the majority leader. He has been for a long time. I spoke to the Republican leader about the plan. Everybody's for doing something about infrastructure. Why haven't we done it? Well, no one wants to pay for it. Less than 4 years ago, as I said, the Congress passed a tax cut of $2 trillion, increasing the national debt $2 trillion. It didn't meet virtually any of the predictions it would in terms of growing the economy. Overwhelmingly, the benefits of that tax package went to the wealthiest Americans. It even included new investments that would profit by shifting profits and jobs overseas if you're a corporation. It was bad for American competitiveness, deeply unfair to the middle-class families, and wrong for our future. So here's what I do. I start with one rule. No one, let me say it again, no one making under $400,000 will see their federal taxes go up, period. This is not about penalizing anyone. I have nothing against millionaires and billionaires. I believe American capitalism. I want everyone to do well. But here's the deal. Right now, a middle-class couple, a firefighter and a teacher, with 2 kids making a combined salary of, say, $110,000, $120,000 a year, pays 22 cents for each additional dollar they earn in federal income tax. But a multinational corporation that builds a factory abroad, brings it home and sells it, they pay nothing at all. We're going to raise the corporate tax. It was 35%, which is too high. We all agreed 5 years ago it should go down to 28%, but they reduced it to 21%. We're going to raise it back to up to 28%. No one should be able to complain about that. It's still lower than what that rate was between World War II and 2017. Just doing that one thing will generate $1 trillion in additional revenue over 15 years. In 2019, an independent analysis found that there are 91, let me say it again, 91 Fortune 500 companies, biggest companies in the world, including Amazon, that use various loopholes so they pay not a single solitary penny in federal income tax. I don't want to punish them. That's just wrong. That's just wrong. A farmer and a teacher paying 22%. Amazon and 90 other major corporations paying 0 in federal taxes. I'm going to put an end to that. Here's how we'll do it. We're establishing a global minimum tax for U.S. corporations at 21%. We're going to level the international playing field. That alone will raise $1 trillion over 15 years. We'll also eliminate deductions by corporations for offshoring jobs and shifting assets overseas. You do that, you pay a penalty. You don't get a reward, in my plan. And use the savings from that to give companies tax credits to locate manufacturing here and manufacturing and production here in the United States. And we'll significantly ramp up the IRS enforcement against corporations who either fail to report their incomes or underreport. It's estimated that could raise hundreds of billions of dollars. All this adds up to more than what I proposed to spend in just 15 years. It's honest, it's fiscally responsible, and by the way, as the experts will tell you, it reduces the debt, the federal debt over the long haul. But let me be clear. These are my ideas on how to pay for this plan. If others have additional ideas, let them come forward. I'm open to other ideas so long as they do not impose any tax increase on people making less than $400,000. Let me close with this. Historically, infrastructure had been a bipartisan undertaking, many times led by Republicans. It was Abraham Lincoln who built the Transcontinental Railroad. Dwight Eisenhower, Republican, the interstate highway system. I could go on. And I don't think you'll find a Republican today in the House or Senate, maybe I'm wrong, gentlemen, who doesn't think we have to improve our infrastructure. They know China and other countries are eating our lunch. So there's no reason why it can't be bipartisan again. The divisions of the moment shouldn't stop us from doing the right thing for the future. I'm going to bring Republicans into the Oval Office, listen to them, what they have to say, and be open to other ideas. We'll have a good faith negotiation with any Republican who wants to help get this done. But we have to get it done. I truly believe we're in a moment where history is going to look back on this time as a fundamental choice having been made between democracies and autocracies. You know, there's a lot of autocrats in the world who think the reason why they're going to win is democracies can't reach consensus any longer. Autocracies do. That's what competition between America and China and the rest of the world is all about. It's a basic question. Can democracies still deliver for their people? Can they get a majority? I believe we can. I believe we must. Delivering for the American people is what the American Rescue Plan was all about. And it's been overwhelmingly popular when I wrote it. Everybody said I had no bipartisan support. We're overwhelming bipartisan support with Republican, registered Republican voters. And ask around. If you live in a town with a Republican mayor, a Republican county executive, or a Republican governor, ask them how many would rather get rid of the plan. Ask them if it helped them at all. It's what the American Job Plan is about. The new one I'm proposing. I hope Republicans in Congress will join this effort. I hope and I believe a number of businesses will join this effort. And I hope and believe the American people will join this effort. Democrats, Republicans, and Independents, we can do this. We have to do this. We will do this. We just have to remember, this is the United States of America. And I've said it 1,000 times. There's nothing beyond our capacity if we act together. So it's time to move together. Thank you, and I hope I get to come back to see you folks after this plan is passed. And the question is, you have to attract even more apprentices, more people, because we're building so much. God bless you all, and may God protect our troops. Thank you.
And welcome to Wealthy as well as Corporate America. Let's get straight to Elon Moy with all the details. Elon.
Melissa, the president there trying to strike an inspirational tone, calling on the country to consider the possibility of American innovation, but also underscoring the fact that what he's calling a once-in-a-generation investment in infrastructure is also fiscally responsible. A few new details that he shared during that speech included that raising the corporate tax rate to 28% would raise $1 trillion over the span of 15 years. He also said that establishing that global minimum tax on foreign income, that would raise another $1 trillion. And he went beyond what the White House had said previously, which is that the $2 trillion in infrastructure spending would be paid for over 15 years. He said that it would be more than paid for over that period of time, that they could even raise more revenue to make up for that amount of spending, that historic amount of spending, because he said that this is going to be not just about paying for infrastructure, but also about making America more competitive. So you're starting to hear the argument that Democrats are going to make against some businesses that say raising taxes on businesses would actually make American companies less competitive. What the Democrats are saying, what President Biden laid out today, is that by creating jobs and creating new opportunities for investment, that is actually going to improve American competitiveness and create a path forward for a stronger economy. We'll see, Melissa, how that ends up. On Capitol Hill, who are already not going to vote to
But maybe blocks, but the fact that this plan is very far-reaching. I understand the summary is a 24 page. That's sort of plan, and it also includes things like child care and money for housing. I mean, all these things necessarily come to mind when you think about infrastructure.
Well, that's right. Plan includes $400 billion for the economy. It includes $100 billion on $180 billion for R&D, money to schools. So it is extensive and wide-ranging. And let's remember, this is the half package. This is the American House package. We have yet to unveil what he's calling house. Increase on a high income and on wealthy households. So this is only part one of two, and already is sweeping large. Democrats would say bold, Republicans would say overreaching, and so I think where you're going to start the conversation on Capitol Hill is not with the two together, but what are legislative tools that Democrats can use to get this done. Speaker Nancy Pelosi indicated she would like to see something in this body. That's according to a source familiar with her thinking. We'll see if they're able to meet that line.
Yeah, thank you. Let's traders for guide Tim Karen and Nathan sitting here and very intently listening to the president unveil this plan. When you think back on this plan, you think most about what will be spent on infrastructure and how manufacturers could benefit, EV makers could benefit, et cetera. Do you think we'll see a rise in taxes in the markets?
The market doesn't really concern the corporate taxes. I mean, this has been a quite some time basically so, although I think it's to think about it, it's we've talked about, and some of the names Karen's talking like you are, which you can expect about, or these names will be nefarious. About Caterpillar today came on a whisper all the time. 5-4 pulled back. You mentioned Vault Materials. All these names do well. The question we have to ask, and some of us have answers or concerns, is basically discounted all. Some of them in these have been extraordinary. And from where the market lasted, where it's type thing. The question comes down to is the market ahead of us. And some of these stocks, I think, are short.
Because much of the market has into some degree rising tax, they will have price and some rise in tax. As a business, Karen, how do you approach like which you owned for some time? I've seen this.
Yes. I thought, the market was B7 see what today. I we're going to get for do a lot of pricing. And so from now, I'm probably looking at some out of the money calls. But I think I get really interested in all taxes that we've known for a while. Taxes and markets seem to care. But if you look at this, like in rent, stuff, the one we would be efficient infrastructure, and yet maybe the market just doesn't care about the tax rate. Maybe they don't think it'll happen. I actually do think it'll happen. There's been a political will that both the tax was somewhat chink. So I'm not sure, but I'm going to be telling out of the calls against. So that what I want to add, the business model is fantastic. We have higher utilization and higher costs. It drops to the bottom line a lot. Very.
But that'd be really good if the market is already factored into the S-factor high today. Do you think yes? Or do you think that it's not a reality and bringing up once again an example of Amazon paying 0 in taxes and that Apple paying 22%?
I think that's sure other things that are very quirky and but in architect there's always now a lot of big tech having market on that a lot and the competition continue back the rest case are going like I love the market just not in the prior dips higher from and we're at least where it's seeing. So I at the point sure you see the polls came in Georgia opposite of this going to look like what would mean for tax legislation the possibility of tax bills but now getting some detail minimum tax might look like and which part of the tax structure is going to be gone after so again for X I don't think taxes have begun to address but at a time look at some point I have to back some of this I think the context of today's announcement a lot was
what do you make the whole patch?
Yeah, I'm just to work back. And so, happened in 2018 is that we borrowed $1.5 billion a year. We gave it to corporations that we did. They did not do invest in America, do to invest in business, to hire people, that sort of thing. They bought back their stocks. So in the next 2 years, I think buybacks in the U.S. equal probably $1.5 trillion, which was the tax cut. At that point, what I think about this plan is that there is going to be some sort of focus on actually in infrastructure. So, industry has to rise some that is transferring the actually much lower 35 in 2010. At the day we find that we're in corporate inside invest capital, that is going to be the best thing in America. And then at the end of the day, also if we share a lot of jobs, 5-year attack on globalization, all of a sudden industry seems to be well positioned. The supply chain, the pandemic. We want to make a lot of stuff here. Intel just told us they want to make chips here. They want to make factories here. Our auto company invested in EV and autonomous, and that's going to be great for America. I just think that we need to find the right equal rate as far as the investment's concerned, and then maybe this plan is on path to do that. Yeah,
equilibrium is important, especially to the markets, Guy. But to Dan's point on buybacks, even if just the element of buybacks and that support in the market, if that goes away entirely or almost entirely, because the gravy train of the tax cuts is gone, then you lose that one support of the market, and that could be trouble for equities.
Yeah, that's an interesting point, and I completely understand it at that level. And I would push back and say, well, I'd also say the companies have gotten lazy over the last 12 years because they haven't had to focus on their businesses because money's been so cheap, and all they have to do is buy back stock and watch the stocks go higher. So if you take that away from them, maybe it'll force them to actually be better operators. So in a perverse sense, it might be the most bullish thing possible for the stock market. I think that's just another way to look at it. Again, I just think that Fed policy over the last 12 years has made people lazy in so much to be able to buy back stock. You take that away from them, it forces them to focus differently. And I think that's a bullish thing. All right. For a more straight reaction to the infrastructure package, let's turn to Savita Subramanian, head of U.S. Equity and Quantitative Strategy at Bank of America Securities. Savita, great to have you with us. You have said that you believe the market was pricing in infrastructure for a long time. And so are there any surprises in what Biden unveiled?
Yeah, I think that the market is pricing in the good news around infrastructure. And if you look at just a few different measures of valuation, market cap of the S&P to money supply, that indicator suggests that the market is expecting to see over $2 trillion of near-term stimulus, just based on getting back to some kind of average multiple. Now, I think to your trader's point, I don't think the market has necessarily priced in the negatives, which are how are we going to pay for this? And where I worry is that we're starting to hear more and more concern from investors on tax hikes. And while that's not necessarily anathema to corporate earnings for this year, we're still expecting to see very strong corporate earnings. We do think that, potential reversal in the tax hikes based on Biden's current corporate tax proposals could take as much as 5 to 10% off of earnings growth for this year. Now, remember, we're still forecasting about 20% earnings growth. So we'd still see strong earnings growth, but there is a pretty big differential between, kind of pre and post tax reform, what that earnings growth is going to look like. And again, I think the problem is we're likely to see fiscal spend and infrastructure spending over a protracted period of time, whereas tax hikes hit immediately, probably sometime next year if we see them. So I think that's the risk, is sort of the timing of the good news, the immediate hit of potential negatives. That's an interesting point. That this stimulus to the economy will happen over such a prolonged amount of time versus the immediate hit. But the 5 to 10% earnings growth haircut, Savita, that is based on a 28% corporate tax rate. Exactly. It's just based on the partial reversal in the Bush tax cut, and then the foreign earnings excess taxes. So what does that do to multiples and for your expectation for the S&P 500? Well, so we were kind of baking that in, and as you know, we're not super bullish on stocks. In fact, our target for the S&P right now is below where we are. We're looking for 3,800 on the S&P by year end. And, I continue to say I think that action this year is going to be in earnings, not in multiple expansion. But where you are going to see multiples continue to expand is in the cyclical GDP-sensitive areas of the market. So I'm a big fan of industrials, even though they've run quite a bit since, last March. I mean, I think that what we need to remember is, we've seen industrials and cyclicals and CapEx beneficiaries do really well since last March. But think about where we were last March. Last March, the world was ending. We were in a complete global collapse. Of course, stocks have gone up since then, but I think what's interesting is that we've seen new highs for tech, for every month since late last year, whereas we're only starting to see new highs in some of these industrials and CapEx beneficiaries. And on a valuation basis, consumption plays, COVID beneficiaries are still trading at premia in some cases to CapEx beneficiaries. So I think that there's still room to go in this cyclical kind of CapEx beneficiary trade. And I like industrials. I like select materials. I think there are pockets of the market that can do really well on a continued basis, even though we've seen such a strong run in some of these areas. Savita, thank you. Good to speak with you. Savita Subramanian. For a look at some of the stocks that could benefit from the infrastructure bill, head on over to cnbc.com/pro. Let's quickly trade this. Tim, I'll go to you.
she's already factored this in. She's factored in a 20% corporate tax rate and will stand pat on her estimates for the S&P 500. Make you feel better?
Well, I'm not sure. I think the market is yet to really address and pay for the taxes. So what she said about the companies that benefit most, and look at it, GM, a name you know I'm long, case in point. That stock did nothing for 5 years, nothing. And so talk about reinvesting in their business and talk about reinvesting in the things that are part of the infrastructure bill and the focus of this country, like EV and efficiency, and where they're creating jobs. So I think this is about multiple expansion. Remember, in terms of industrials and commodities, I don't want to buy them when they're cheap. I want to buy them when they're expensive, and that's what we're seeing. We're seeing them actually re-rate. That's the time to own them, to me, as an investor.
All right, let's move on here. Treasury Secretary Janet Yellen speaking out about vulnerabilities in the hedge fund world. Let's bring in Steve Leisman, who's got more on that. Hey, Steve.
Melissa, yeah, the blowup of Archegos, a family office, as you know, masquerading as somewhat of a hedge fund, got the attention of top financial regulators. The Financial Stability Oversight Council that brings together all the top financial regulators, including Yellen and Fed Chair Jay Powell, just releasing a statement saying the issue was discussed during their closed-door session this afternoon. No details were provided, but it was the first FSOC meeting chaired by Janet Yellen as Treasury Secretary, and she definitely signaled a more aggressive stance on regulation compared to her predecessor, former Secretary Steve Mnuchin. Saying that FSOC needs to do more to address the financial system vulnerabilities, Yellen said she was reestablishing the hedge fund working group that Mnuchin had disbanded. Yellen said FSOC would look at how hedge funds amplify stresses on the financial system. We'll also look at vulnerabilities of non-bank financial intermediaries, open-ended mutual funds, and money market funds, all things that have been on the list but not necessarily focused on. Also pledging to review disruptions in the Treasury market last spring that came from the pandemic and forced the Fed to intervene to provide liquidity. Finally, the vulnerability of the financial system to climate change, discussed for the first time by FSOC. Melissa?
So they won't say that this is directly in response to what's gone on at Archegos, that it was in the works beforehand? Nothing to do with it?
The hedge fund thing was,
Yeah,
but we did find out from a readout they provided that, in fact, this Archegos, I guess it's pronounced, you tell me, Melissa.
It's a mystery to me.
But in any event, it was actually discussed at this FSOC meeting.
Okay. Thank you, Steve. I'm just going to call it the family office headed by Bill Fong. So, Karen, is this a good thing or a bad thing, thanks, Steve, for the hedge fund industry to get this working group, restarted?
Well, that is a good question. Depends what they make of it, right? Yeah. But it would seem to be that protecting actually banks from, I don't know at what point did they become aware that, wow, they all had this exposure, and that makes it that much riskier, because if everyone wants to try to get out at the same time, we see what happens. For hedge funds who want to continue to do this kind of leverage, probably a bad thing, but that's okay.
Yeah, I mean, Tim, you're shaking your head. No? Doesn't make a difference.
Well, I agree with what Karen's saying. I'm shaking my head thinking that, poor banks, like they didn't know what they were doing. Come on, they've got very sophisticated risk management teams.
Some banks made money off of this.
Derivatives. Yeah, well, I mean, again, and by the way, trading swaps is one of the most profitable things you can do. They make a lot of money on swaps. They make more money trading swaps than they do on cash. So, to the extent that they took some risk, I mean, they're big boys. I don't know that we need to protect the banks from hedge funds who are sophisticated investors. I think they sought out that business. I think I'm not worried about the bank's balance sheets here. I think, at least overall, I think there's significantly less leverage in the system. I think hedge funds, as we said this 2 nights ago, probably have leverage similar to where we were back at the Lehman crisis. And it's not catastrophic levels, but it's a lot higher. I think banks' balance sheets are very different. They're fine.
Yep. All right, we got an earnings alert for you on Micron. Shares are jumping in the after hours. Josh Lipton's got all the details. Hey, Josh.
So, Melissa, remember heading into this report, this stock had rallied about 20% this year. It was up about 110% in the past 12 months, and now still higher here in the after hours. Micron beating on the top and bottom. Q3 guidance also stronger than expected. They catch up with Matt Bryson over at Wedbush. He says inventories and accounts receivable came down in the quarter, so that suggests Micron is really shipping everything they can. Having said that, he does have a neutral rating here on valuation. On the call, CEO Sanjay Mehrotra is saying they're seeing Micron seeing a high higher demand across multiple end markets. Talked about the data center where enterprise demand is starting to improve. In PC, they continue to see healthy demand. Mobile revenue grew 21%. Auto, more demand than Micron can supply. Bottom line, 2021 is shaping up to be solid, he said, with the overall outlook improving since the last earnings call, though he did note that supply is constrained with lean DRAM inventories. Melissa, back to you.
All right, Josh, thanks. Josh Lipton. Guy Adami, what do you think of the report?
It's amazing. The operating margin came in north of 20%. Same quarter last year was 11.3%. You say, okay, maybe it's not a great comp. Well, the street was looking for, I think, 17%. So this is a really good quarter. I think, if I'm not mistaken, Coco Beware was on last night talking about the options action in Micron. So I think Mike had it on. I think you stay with Micron. I think it continued to grind higher from here.
That would be Mike Coe, for all you who need a dictionary for that.
That's what I said.
Dan, what do you think of Micron here?
I love it that Guy Adami immediately goes to the operating margins. Mel, you've been doing this with Guy for how long?
Too
Does
long.
he always go to the operating margins every single time?
Usually, especially for chip companies.
Usually. I love it. Listen, I think they're saying all the right things, and I think that that supply constraint, and you think about those secular areas where they're exposed, AI, 5G, that sort of thing, I think it probably sets up pretty well. I wouldn't be so concerned about valuation in this market as that analyst that Magnum PI just referenced.
And Magnum PI would be Josh Lipton. Coming up, that's a wrap on Q1. All the major indices posting their fourth straight quarter of gains. So what is ahead? We'll dig into CNBC's quarterly stock report to find out where the top strategists, portfolio managers, and CNBC contributors see the markets heading from here. And later, Microsoft gets enlisted. Shares soaring in a multi-billion-dollar deal with the U.S. Army. We got the details straight ahead.